There is macro uncertainty, there is a global downturn, but yet the IT companies, the stock price has been resilient and large deal flows have been trickling in for the large cap IT names. This is what's different this time versus the previous downtrends for the IT companies, that IT companies are winning large deals despite this slowdown. Their order book is solid. Just today, TCS announced a large deal with JLR, which is valued at $1 billion, spread over 5 years. But in the last month, in the month of August, we had HCL Tech signing a $2.1 billion Verizon deal, and Infosys signed a mega deal with the Liberty Group. It's valued at 1.5 billion euro for a period of 5 years, but there was an option to extend it for a period of 8 years with an estimated value of 2.3 billion euros. So basically, these are mega deals. Not just that, even the stable US economy has been a driver of the IT stocks outperforming despite very poor numbers in Q4 of FY23 and Q1 of FY24. In fact, most IT stocks had declined post their Q1 numbers, but since then, the stocks have recouped all their losses and now are trading well above the levels that they were prior to the weakness setting in. Year to date, IT stocks have done very well with names like HCL Tech, LTI Mindtree, Tech Mahindra, all a part of the Nifty, having seen a growth of close to about 20%. So that's about the stock price. And it's not that deal wins have picked up only in the last 1 month or so, in September and August. For the last 2 quarters, which is where the slowdown has been most pronounced, the company's order book, the deal wins, the pipeline has been very, very solid. Just for reference, we've taken for TCS and for Infosys. Now, both for TCS and Infosys, the deal wins in Q1 were higher compared to what they were in Q1 of last year. Now, the only risk to watch out in all this, in these large mega deals, is will these deals be margin dilutive? Because typically, when you have these large deals, and these are all cost takeout deals, where the company, the client is trying to bring down their costs, optimize their costs, that they typically have low margins for the IT companies in the initial period due to transition. So currently, the street is penciling in a pickup in FY25 margins. But if these large deals are margin dilutive, then is there a risk to the FY25 margin assumptions? We told you about the stock price gains and how the IT stocks have outperformed. Let me also leave you with the valuation plate for the large cap IT company.